okay, insider trading, you're right. Give us half of what you made. You go buy the Mets. I'll take my win in court, and I got $50 billion back for the people of New York. You didn't do shit. James Goodwillie, it's another Ctrl-Alt-Invest.
We're back.
We are back. God, you always give away timing. Has it been a long time, James, since we last recorded?
No.
Since you were talking about Easter?
Mm-mm.
We are back. Question is, are we better?
Yeah.
All right. Follow-up question, are we better than ever?
Always.
Great. Today is going to be probably my most favorite episode.
Yeah?
Yes, I'm really jazzed up. I love, I guess everybody's got a little bit of anger to them or something that really,
Yeah. Everyone's fired up about something.
gets fired up.
Mhm.
This topic today, we're gonna have to be careful not going over time.
All right.
Before we reveal what it is we're gonna be talking about, today's subject is the most ultimate gate kept. Is that fair? Can I say that? Gate kept?
Yeah.
Gate kept thing, in my opinion. And you're going to have to tell me if I'm right or wrong. But we throw around gate kept and maybe make assumptions that we're all talking about the same thing. What do you think it means to have gate kept, to be the gatekeeper of something?
Blocking somebody to be able to do something or achieve something so that only the gatekeepers can achieve that thing or do that thing.
Okay. Maybe it is that obvious and clear. When you said it like that, it's like, of course, that's the one meaning.
Yeah.
What we're going to talk about today is the ultimate, the rich get richer and stay off my lawn.
Yeah.
Kind of thing.
Yeah.
Let's talk about hedge funds.
All right.
And before we get to the anger part, let's go back to the genesis of hedge funds and what it is, what they are. I was wrong on my timing when I started looking into this. I was like, when would it have been? You go first, though. When do you think the first hedge fund was?
1880.
1880. You're a history buff. You always go way back.
Yeah.
I think that history for me is the 80s. That's as far back as my brain goes.
Yeah.
I would have guessed the 80s just because of like greed is good, Wall Street stuff.
Yeah, it's like 1980s.
But no, it was 1949, first hedge fund.
All right. It's like right after World War II.
Yeah. Alfred Jones launched a fund that was a balance of like long and short positions, with the idea being the road to hell's paved with good intentions. The idea was smooth out those ups and downs, short one, long the other, and there's some middle ground there that we'll get solid returns from.
Okay. Makes sense. Name.
Then along came George Soros, who you've talked about in the past.
Yeah.
He was a hedge fund manager. You told the story of he got into it from sort of a worldview, and he shorted the British pound and made a ton of money.
Yeah, that's his is like more macro, right? He takes into like everything into account, or tries to.
Then came the 80s, which is when my clock starts. Greed is good, Wall Street, and there was an I was right about that they did start to blow up around that time period. And the idea being, you've seen Wall Street, right?
Oh yeah.
I think I've talked about it before. My dad loved that movie.
Yeah.
But in the movie, for those who haven't seen it, they basically pillage. It's like aggressive stock takeovers of corporations, right?
Yeah. It's like Carl Icahn or Icahn, right? Is that Carl Icahn?
Yeah.
One of that guy. Yeah. I feel like that's what he did, right?
They go in, they aggressively take over a company via stock purchases, right? So they own more than half. And then they pillage it for its pieces. Who cares about the company? Does it provide public good? Whatever. It's worth it monetarily. and then they go and do it again. There was a Michael Milliken. Do you know him?
No.
Guess what his nickname was? The Junk Bond King.
Oh, love that.
So he had a fund that was focused on the bonds. What's it? Well, I'm just rolling along here. What is a junk bond? Tell me what a junk bond is.
Good question. I think, the bond is just a note, right? That is promising a return on something. So I don't know what a junk bond is in particular.
So we've talked before about the bond market. That was one of our episodes. You let us know that the government can issue bonds,
Mm-hmm.
and it's a promise to pay back, right?
Right.
So if they want to build a road from Florida to Maine, they can issue bonds to raise the funds. The bonds might pay 3, 4, 5%. But the reason they pay low is because they're backed by the government. And in theory, the government's never going to default. You are,
So it's safe.
safe investment.
Yeah.
The junk bonds are corporate bonds that don't have a high credit rating. So your credit as a corporation, maybe you're GameStop,
Right.
in the digital age, and you're like, oh man, this is not going well. The stock's tanking. We want to raise funds for, I don't know, maybe you want to put more Pokemon in your GameStop stores. So you need to raise money. So you go, okay, we've got these corporate bonds, and the agencies go, this is a dying business. I mean, these are going to be rated C or D.
Yeah.
But the returns are higher. So now they'll pay 10, 12, 15%. But the default rate's high. So Michael Milliken, if I understand it correctly, was the junk bond king, where he would go out with this hedge fund that the wealthy can invest in, and he would buy up all these junk bonds. I think a lot of times he knew they couldn't repay. And very similar to like the takeovers, he would aggressively pursue the debt and either wind up with the company or get some sort of mass. Yeah.
That's interesting. I wonder when those rating agencies popped up. That'd be an interesting thing to look up. Because I assumed that this guy started before that, right? Because I'd heard of, the junk backed securities in the mortgage market, right? How you had the AAA tranches and AA's and all the way down to C's and stuff, right? Of like people that had no income, they didn't put anything down, and to your point, they're higher possibility of default. But that's interesting. So he would just go in and strong arm his way by buying up all these bonds, and then position himself of like, give me the money, give me the money, give me my money, give me my money, and then eventually like, well, we can't pay you, and he's like, I'll take your company then.
Exactly.
Wow.
That's exactly right. And I guess there's, the flip side of that coin is, who wants a company that's dying anyways?
Yeah.
But there's obviously value in that, and it paid because he did it. John Moody, Moody's ratings.
Yeah.
1909.
Whoa.
Started with railroad bonds, and he started grading them.
I wonder how. So what was the junk bond king? What was his name?
Michael Milliken.
Michael Milliken. I wonder how many rating agencies he had under his wing. How many he paid off?
Oh, you think he paid them to give him lower ratings?
Yeah, just like the banks did for the mortgage market, where they didn't necessarily pay him, but they knew that if they didn't rate these mortgage-backed securities as a certain high enough rating, that the bank would just go to one of the competitors.
That's a good question. I hadn't thought about that. And when you first started saying it, I was like, that doesn't make any sense. But I guess it does. So the same way you would manipulate a good rating, if you manipulate the bad rating, it makes the debt essentially unpayable. And so as you get into it, that maybe the business or the product is still viable, but it can't carry that high percentage.
Yeah, exactly.
But that is a perfect segue. I feel like I'm rushing through this, but we've got a lot to.
Yeah, we have a lot to unpack.
That's a perfect segue into how ridiculous the hedge fund market is. Now, it's important to note, and maybe, you get mad at this. This is an anger button for James, is the government telling you what you can do with your money and what you can't.
Yes.
The hedge fund market's unregulated. It's not like the mutual fund. So if you have a mutual fund, government, SEC laws apply. And so they say, okay, well, we're regulating that market. So anybody in public America can invest in that mutual fund. The hedge fund market is unregulated. I don't know if the government says you can't participate or the hedge funds say you can't participate. But usually it's like you got to have at least 100,000, 500,000 to participate.
Yeah. Yeah. I mean, they still follow like SEC law, right? There's still like certain things that they can and can't do. But yeah, compared to a mutual fund, it's totally different.
So it's not the government saying you can't go into that unregulated hedge fund. It's the hedge fund saying, I don't want your $20,000.
Yeah. Yeah. It's a private company, right? Yeah. It's not like Berkshire Hathaway where it's like, it's technically an investment firm, even though they own a ton of different things, but it's a publicly traded company. So theoretically, somebody could go and buy a massive piece of it and just get into it. But yeah, Bridgewater is not publicly traded, you know?
Protecting the public is a good idea. How many scams do you think it takes before something gets shut down?
I don't know. I would hope just one time, or twice maybe. I mean, people have been doing Ponzi schemes for hundreds of years.
Yeah, we'll get to that.
All right, okay.
I think of like we've talked before about multi-level marketing, and some of those were just flat out, like you said, maybe Ponzi schemes or fraud. And I guess but that's not a regulated market. Like if you and I wanted to go start one today, we could, right?
Yeah.
History is littered with examples of hedge funds bullshit.
Not surprising.
We talked before about long-term capital management. That wasn't so much a scam or a fraud as they were so over-leveraged that their collapse had massive impact on the market. And let me pause there for a second, because it's easy to say, well, the hedge funds are off doing their own thing. They're not letting smaller investors get in.
Mm-hmm.
So who cares what they do, because it's all rich people with their own rich money. The problem is the way they participate in the market that everyone else is participating in, it has ripple effects and ramifications for everyone. So you can't get in, but you're paying the bill when things go wrong. So long-term capital management, over-leveraged, their collapse almost destabilized global markets. Don't worry, there was a bailout.
Of course.
Straight up fraud, Bernie Madoff, famous story.
Yep.
Bernie Madoff was the largest Ponzi scheme in history.
Mm-hmm.
They never recovered that money.
Nope.
2009, right on the heels of that. So maybe with Bernie Madoff, maybe we would have done something. 2009, I'm going to butcher this name. This is Galleon Group, Rajaratnam.
Okay.
Insider trading network. Dozens of convictions, making it one of the largest insider trading cases in U.S. history.
Just the largest one they caught.
Thank you. Yeah.
Yeah.
Because there's more here. I'm going to get to them.
Yeah.
How many weren't caught?
Right.
SAC Capital, Steve Cohen. What do you know about You know Steve Cohen.
Oh, yeah.
What do you know about him?
He owns the Mets.
He does. Yes. Speaking of getting in trouble for things.
Yeah, right.
What do you know about him?
So if you've ever seen the show Billions on Showtime, Axe Capital, the whole premise of the show. So he's this just gunslinging hedge fund manager that operates in that gray area, and then a lot of times in the completely black area of, no, that's fully illegal. Like that's inside information. But he employs like these people outside of the company to find this information and stuff. So it's not necessarily like it's not him going out to get it, right? But yeah, he's just a fly by the seat of his pants. Super, super smart guy. I won't take that away from him, but kind of like a rebel in the space. The show was based off of Steve Cohen. Yeah, how he goes from hedge fund, SEC in trouble for insider trading, and he basically figures out how he can get out of it with minimum damage, and then he goes and starts a family office.
That's perfect. That's what I have here right in front of me. Implicated in a series of insider trading cases leading to multiple convictions. Not just like, hey, we think something's going on. There was convictions, and then they converted the fund to a family office.
Kept all of his money, and then now he is the proud owner of the New York Mets baseball team.
Isn't America grand?
Yeah.
So maybe we would have started regulating or figuring out something.
Mm-hmm.
2021, Archegos Capital. Does that ring a bell?
The name sounds familiar.
Bill Huang's family office collapsed after highly leveraged bets, causing $10 billion in bank losses and facing fraud charges. Amaranth Advisors, $6.5 billion they lost on natural gas futures, leading to a rapid collapse. I'm not clear if that was if there was a bailout after that.
Oh.
Pequot Capital Management, Pequot. Somebody should have prepped me for this episode. Settled SEC insider trading charges, prompting its closure in 2009. Bayou Hedge Fund Group, Samuel Israel III's Ponzi scheme involved fake audits and $450 million in losses. And then, like you said, there's more. That's like maybe we didn't have the proof or maybe we didn't know enough. 2003, Goldman Sachs, of all things, can you believe it?
No way.
They were caught doing late trading and front running.
Wow. Who would have thought?
Who would have thought? Listen, James, these are just companies that are trying to help out investors.
Mm-hmm.
What is late trading and front running? Do you know?
I have no idea.
It's essentially, this is the most Goldman thing of all. Goldman Sachs, I don't even have enough information to really, we could do a 7-part series on unraveling the bullshit that Goldman Sachs has unleashed on this country.
Oh, yeah.
But essentially, because Goldman Sachs is a broker, right? Or at least it's one function. You have, let's make it small. You have 10 customers. You place trades for them. Your 10 customers just heard about the iPhone. Steve Jobs is about to present the iPhone. So the 10 customers came to you and said, we all want to buy Apple. Goldman Sachs goes to market first before they perform their duty for you, the 10 customers, buys Apple at $10. And buying does what, James?
Jacks price up.
Now customers get their orders in at $11 and Goldman can sell it back to their own customers.
Holy shit. What an outrageous thing to get caught for.
It's incredible.
And then have people lining up around the corner to jump in and spend their money with Goldman still.
That's right. And let's go ahead and make let's make Hank Paulson the Treasury Secretary. Hank Paulson being the CFO, CEO of Goldman at one time or another.
Yeah. You know what? Going back to hedge funds, you know what I always found interesting is how these guys end up. I mean, most of them have been either the entire fund has been caught insider trading, or at least I'd probably say every single hedge fund has at least had one insider trading case, right? Whether it's just a lone wolf doing his thing, whether it comes from the top down or what. I feel like only a very small percentage end up going to jail. Most of them just get either a slap on the wrist or they have a deal where they pay a certain amount of money and then they get their license taken away or whatever.
Or they have to run the Mets.
Right. Or they have to take all their billions and buy the Mets in cash. I think the crazy thing to me is going back to government and the way that the judicial system works. The reason I think that most of these companies end up with slaps on the wrist and with just fines and their license taken away as opposed to actual jail time, which is like if you and me got caught insider trading, we're going to jail, is because the attorneys, right, these district attorneys or whoever is prosecuting these cases, they have bigger ambitions, right? They want to get to the next level. And the way that the government works in that regard to get to an attorney general level or something like that, you need wins. And a deal counts as a win for them, right? It's not a lost case. But if the district attorney of New York has to go against Cochran and drag out a case for 4 years, that's a long time to potentially get a loss. So they just end up striking deals to stack their resume so that they can move on to the next level as opposed to actually doing their job and prosecuting these people in a court of law to the fullest extent, which, I mean, makes sense, but is kind of blows my mind.
Yeah, it goes back to incentives and what are you incentivized to do and not incentivized to do. They talk about Facebook and the monopoly that's become. Whatever Facebook got fined for something. I can't remember exactly what the story was, but the number of that fine was just so absurdly below what they had gained from their activity. It's like, and it's the same thing here. Okay, insider trading, you're right. Give us half of what you made.
Right.
You go buy the Mets. I'll take my win in court, and I got $50 billion back for the people of New York.
Yeah.
You didn't do shit, and it keeps happening. And that another you you mentioned these public offices. Are we in this territory now? I feel like I've heard this getting talked about, and I'm glad it's being talked about. Are we in oligarchy now? Elon Musk, oligarch number 4.
Yeah, I don't know. We could go down the rabbit hole. I don't think so, for the reason being that I think in Elon's case, like, yeah, it looks bad that he runs a company and is at the top, but he's also supported bills that strip his own contracts, like SpaceX contracts, out of the government's hands, right? So if he had a huge contract, billions of dollars worth of a contract, he has supported plenty of bills to be like, we don't need that, like, it's government waste, cut it. And then he ends up with a loss as his company, right? But if you just strip Elon out of it, everyone in the government comes from a public company, and they're all supporting their own interests. That's some way, shape, or form, right? BlackRock being the biggest proponent of that, I'd say. They obviously own so many different things and have so many interests all around the world and in the public space. And every single president since BlackRock has existed has had cabinet members that were in BlackRock, or had people that have run huge departments that were a VP or an SVP or really high up at BlackRock and still have ties there, or you name it, right? But it's I think ever since and I forgot what the rule was, where you allowed money in politics, I think ever since then, we're starting to get on that, right? Like the fact that
I feel like you're going about proving my point for me.
Yeah, no, I think it's a fine balance. I think if you look at an oligarchy in its truest sense, and you look at like Russia, we're far from that. And I believe that, right? Because we're not going in and saying, you know what, because you know what, SpaceX, we like you, Elon, or like let's say the government went to Blue Origin, Bezos' company, and said, no, we don't want two competitors. Blue Origin is now the government's company, and Elon, you're going to run that too. That would be an oligarchy, right? Where it's just like consolidate everything and give it all to your boy. And I don't think we're there. We're not at that point.
TikTok
for sure. But I think and I think that's one of the that's why it's such a big deal, right? Is like, what is that? What's it worth, right? Like the fact that it was stealing information. It was feeding certain things to certain kids, or certain age groups, excuse me. It was influencing elections and whatever. And so it's like, do we allow that because we're a free country, or do we take that and either force the sale? I fully agree. Like, we can't make that a government entity. That's bananas. And we can't take it and sell it to one of his buddies, one of Trump's buddies.
Well, that's my point. I'm you know me. I became very passionate in the privacy space. Edward Snowden, he legit is a hero of mine. What he did was so brave. He's essentially sacrificed his life to go and say, look, and whether you think he's a traitor or not, he ripped the Band-Aid off all of this corporate spying, government spying that was going on.
Yeah.
I am 1,000,000,000% on board for, if you cut out Huawei or TikTok and say go away because these are like Chinese spies, I'm on board with that. What the president of the United States said was, oh yeah, TikTok, maybe we'll take that. And he pointed to his buddy over at Oracle. Who's that, Peter Thiel? Is that who that is?
No, Ellison.
And he's like, he would be really good at running it. So, and then I go walking this all the way back, and thank you for bringing this all up, because again, I think you're arguing my point more than you were arguing your point.
Yeah. No, I'm not saying we're not. I'm saying it has gotten to that point. We've gotten close many times in history and never surpassed it. And we're not closer now than we have been in the past. So I would argue that we're still not at that level, because, you go look at the Rockefeller age and those types of things, like,
that's fair.
Yeah. Rockefeller had 8%. His personal wealth was 8% of the American GDP. So like whoever was president at that point, besides Teddy Roosevelt coming in and saying like, no, screw you guys, I don't care, I'm getting rid of it all, every other president was under their thumb.
So I was getting ready to agree with you, but now I'm even going to walk that back myself because I've mentioned many times before, All the President's Bankers. I'm still slowly making my way through that book.
Yeah.
It's thick. It's very good though. Tons. There's more than one chapter on the Rockefellers. It was I think the 70s, 60s or 70s. They talked about with the I guess it was the 70s because it was the Iran Contra stuff. Rockefeller, one of his descendants, played a huge role in that, which I don't know is clear public knowledge. When they had the hostages situation, the big bankers, Rockefeller included, played a part in that in both getting Reagan elected. Isn't there a story? I'm going off on a wild tangent here. There's a story that the hostages were kept longer than necessary because they were getting ready to release them, but they didn't want Jimmy Carter to have the win. And so that's why when Reagan came in day one, they made it look like he solved that situation. Does that sound familiar to you?
No, I never heard it, but yeah, makes sense.
Yeah, makes sense.
Yeah, I think just to counter argument that, of course, Rockefeller helped the Iran affairs. Their whole business is oil, duh, right? So it's like, yeah, I see, like, they do help and things like that, but like, I mean, it's all for their personal gain.
So I was going to lead with Musk and Doge, but even talking about Rockefeller and the bankers over the years and all the influence that they've had and the pull that they've had. Maybe it feels like we're keeping it at arm's length, and maybe we're not. Maybe we've been an oligarchy for the past 100 years and no one wants to admit it.
Yeah, I agree. I fully agree. I think it just depends on how you view that term. And I think that's the biggest thing, right? I don't think we are, just because Elon's in, I don't think we're any more of an oligarch than we were during the Obama years when he bailed out the companies and consolidated, instead of a ton of banks, he consolidated them into a couple big ones, right? That had even more power, right? I don't think we're any closer, but you could still argue, I think to your point, that we have been for a while. It's just, we're not at Russia's level. So like a lot of people are like, no, we're totally not, right? We're totally not there. It's like the, and same thing with the 401ks and Social Security. It's like, that's not socialist because we're not a socialist country, right? And it's like, well, it is. It's a socialist policy. So yeah, I think it's just like, because we're not as bad as other countries, people just like look the other way and they're like, no, we're still fine.
That's such a great point. Such a fascinating conversation. And I guess too, similar to TikTok, is it fair to say when the government during the 2008 financial crisis, they helped facilitate the sale of Bear Stearns and Lehman? Does that fit the mold, or was that like, hey, we're just trying to help out here?
Yeah, well,
avoid a nightmare.
To your point, the what is it? Road to good intentions is
road to hell's paved with good intentions.
Yeah, exactly. I think that's it. Right? Is like, I don't necessarily think that Obama was like, you know what? I'm going to create an oligarchy, and I'm going to consolidate power into all these banks or whatever. I just think he was out of his realm and got played by these giant banks. And I think similarly to our current president, to your point, he doesn't know a whole lot. I don't think he knows what he knows, but I think he's a salesman. I think the good intention is, to your earlier point, like, waste is bad, fraud is bad. Let's get rid of it. Let's clean some stuff up, because otherwise we're going to go bankrupt as a country. Great. Love it. Elon volunteered. He doesn't care what people think, and he's willing to do it at a rapid pace, and why not, right? And I think but now I'm sure there's ulterior motives. There's certain things that Elon may want there, whatever it is, but I think it's not necessarily a case of the people in power saying, I want it to be an oligarchy. I think it's just like, this keeps happening over time, right? Our presidents, our leaders keep getting played.
Oh, for 1,000%. And going right back to the book again, All the President's Bankers, go pick it up. That's sort of the point, is that the presidents come in, they're not financial geniuses, and maybe they don't know a ton about treasury or economics, and they rely on this group of bankers who they need their support for public sentiment. Similar to going through the list of the hedge funds, we're kind of getting, we might be off topic at this point.
Yeah, we may have to cut that middle section.
I think it plays together nicely. We're talking about how wealth is created and who gets to create it and who gets to participate. The hedge funds, you got to be rich to get in. so that the rich can get richer.
Mm-hmm.
And that's, again, I would say that's fine if it doesn't impact anyone else, because you were certainly able to go out and try and create your own wealth, start a business, whatever you want to do. And maybe you can get into that club. But they end up, power leads to corruption, or money leads to, power leads to corruption. It just manifests itself. But again, at the end of the day, who pays the price? It's not them. It's your 401k. It's your stock that's going up and down for who knows what reasons. Well, we know what reason. And then just kind of like going through these players. So the oligarchy conversation went a little bit different than I was anticipating, but I did want to roll through these names because these are famous hedge fund managers that may or may not have been fraudulent, who I was sort of going to frame up as like, these are our oligarchs.
Yeah.
You just weigh in if you want. So Soros was first on the list. He was known for his macro hedge fund.
Mm-hmm.
James Simmons has Renaissance Technologies. They do quantitative and algorithmic trading. Ray Dalio.
Oh, yeah. Bridgewater.
Yeah, Bridgewater, really just based on principles.
Yeah. He wrote a book called Principles, right?
Oh, did he?
Yeah. Great book.
Would you think he's done anything nefarious? Or you think he's like one of the good guys?
Good question. So Bridgewater's the largest in the world. They're the largest hedge fund in the world. He was, Ray was one of the first ones to use quants and do computer stuff and all that. I would 100% think that Ray has done some stuff nefarious. I think maybe not in the U.S., but at the U.S.'s expense. So he has pumped a fuck ton of money into China. So who knows how much he's in bed there, or other countries that operate at the expense of the U.S. I don't know enough about him to say like he's definitely done what Steve Cohen did,
Ray Dalio, national security risk is what you're saying.
Yeah, there we go.
John Paulson, they bet against the subprime market. Is that what's his name, worked for?
Who?
Who was the Big Short?
Oh, Burry?
Burry.
No, Paulson was the, if I'm correct here, Paulson was Steve Carell was Paulson in the movie. I think he took the biggest bet against the housing market.
So they might have talked to each other about it, but they weren't working together.
Right. Paulson was the one that like went to the strip clubs and was like interviewing strippers about how many houses they had and how they bought the houses and all this, like, and then he would go and go down to Miami or Florida and talk to these like mortgage brokers who were absolute idiots and be like, wait, what? And they're like joking about how, oh no, I've got this guy in 4 houses and a vacation home. And it's like, well, how much money does he make? He's like, $100,000, but who cares? I just bought a boat. And then he came, and then he did a lot of hands-on research. Burry just like studied the books and like studied the trends and all the charts and the data. And then Paulson was like, wait, this guy's taking a bet against the housing market? I need to get like boots on the ground, actually like find out what's going on. And then he went, holy shit. And then dropped a ton of money.
That's almost inspiring to me. Like, I don't know. John Paulson, you know any more about him other than that? I don't have anything here that says he was nefarious, if we keep throwing that around.
No. He's a hothead, huge hothead.
I like that.
I'm sure. Yeah. I don't know. It's hard because I'm in the group of like, I'm sure all these guys have done something nefarious.
I see.
But no, I think Paulson's probably one of the better ones.
Okay. I just love that, the idea of, I want to understand a market or something.
Yeah.
And, it's silly to throw out the strip club, but like, it's still, what a great, you're doing your own research at that.
Right. Like, how better way to understand how crazy the stock market, the housing market is, than to go interview somebody who makes all their money in cash and their income is fluctuating and all that, and then find out how much they make, find out how many homes they have, and be like, oh my God. Yeah.
Love it. All right. Steve Cohen, we talked about. Ken Griffin, Citadel.
Yeah.
High frequency trading.
Yep.
Good guy, bad guy.
In the middle, I'd say. Yeah. He's an interesting one if you want to take the political look at it. He's a very big political guy. He moved from Chicago down to Miami, spent God knows how many millions of dollars trying to revitalize Chicago, but just nothing would move. Everything was stagnant. Crime kept going up and up and up. And then he eventually said, no, screw it, I'm going to Florida.
All right. We got Daniel Loeb, activist investing. David Tepper, he does distressed debt.
Mm-hmm.
Paul Tudor Jones, he predicted the 87 crash.
Mm-hmm.
More of a macro guy. And then you've got Izzy Englander, $61 billion in assets. You know any of those guys?
Some, yeah.
So that was my list of oligarchs potentially, and just how they influence markets. Again, wrapping up, not the episode because we have more to dive in. Hopefully everybody's in for the long haul.
Yeah, I would say in the oligarch perspective, and I would love to do an episode on this, I would say the hedge fund guys are kind of like in the shadows more than oligarchs. I'd say like what's his name, who runs BlackRock. You talk about these hedge funds and it's like 66 billion under management. Okay. Then you look at BlackRock and it's like 11 trillion. And you're like, oh my God. You go look at go look at the largest shareholders of any publicly traded company. BlackRock or Vanguard is going to be one of the top 4. They own everything. So like those guys, those are the oligarchs.
Interesting.
Yeah.
11 trillion. That's a lot of money.
Yeah. I don't know if it's that or 3 or 4, but it's in the trillions significantly.
A couple more things to hit on here. Who cares is what a lot of people say. I'm not invested in those hedge funds. Let the rich do what they're going to do. But it does impact you. It impacts all of us. The volatility in the market, just like long-term capital management or Archegos, that sent the markets in a free fall.
Yeah.
The day before your retirement, you've got your 401k and it gets cut in half because of these clowns. No good. Now we've got this meme stock battle versus the large institutions. So they're fighting back. They're playing that game. The erosion of trust is huge. We talked about safe assets like treasury bonds. These guys, I think one of the battle cries we heard was like, oh, when we talked about options traders, we provide liquidity to the market, but everyone's hiding in treasury bonds because they don't trust the actual stock market. Who cares about liquidity at that point?
Yeah.
This is a big one. This is actually wild to think about, and I couldn't even begin to imagine putting a number on it. How much do you think the SEC and more regulation takes out of any one market?
Oh,
So just rephrasing that again, going back to the beginning, you have a stock market. You're allowed to put paper shares out there, and Bill and Tom can come, Mary and Sue can come in and trade that paper. But then all of a sudden somebody gets scammed. Okay, let's put in the SEC to make sure we're watching over this.
mm-hmm.
And then there's another scam. Well, let's get this other arm, and now it's more salaries, more red tape, slows things down. We talk about being an accredited investor. That's a process you got to go through. Or even if you wanted to start a fund, what if you, James, wanted to be an oligarch like these other guys? Like, you can't go out and start a fund. You got to go through all this red tape.
Yeah. Regulation leads to oligarchies. I mean, or consolidation of power, however you want to define the term, but regulation leads to that. It does. Regulation is the killer of a free market. 100%. I'll plant my flag on that hill all day long.
We'll have to do an episode on that. That is so interesting to think about. Say that again.
Regulation is the killer of a free market. It inhibits the growth of a small or even the possibility of getting into a market. It keeps power consolidated at the top and lets those guys grow.
There's got to be a middle ground, right? Because you need to have rules somewhere.
Sure. I think so. I mean, prime example, 2008, the right-hand people who were involved in the process of creating these new CFPB laws and laws around finance and how much cash banks have to hold. And JP Morgan was basically wrote the laws. Their reasoning behind that is, and you can look this up, I mean, many heads of banks have talked about this before. Regulation to them is great because the small bank can't hire a team of lawyers. A small bank can't hire a team of regulators. A small bank can't abide by all that stuff. And God forbid you or I wanted to try and start a bank that competed with them. We can't do it. We can't ever grow to that size, ever, because of all of that's in place. Whereas JP Morgan just deploys their whole team and just keeps on growing and getting more powerful.
So you're saying regulation leads to gatekeeping, so to speak.
Yeah.
For sure.
Which is the opposite of a free market.
Indeed. All right. So last thing here, you were excited to talk about this. It's one thing to make your money. It's if you do insider trading, like you talked about, the attorney general is going to haul your ass into court and make sure the government gets their cut and move on. Maybe there's an argument that says, well, these hedge funds, maybe they're doing things nefarious, but it kind of comes back into the market through the form of taxes. However, there is newer legislation.
Newish, yeah.
Newish around where you might be able to hide some of those gains. What do you know about that?
We all know that corporations avoid taxes in any way, shape, or form that they can. They have entire teams that figure out how to not pay taxes, right? Hedge funds are no different. During the Obama years, there was a law passed because, as we all know, Puerto Rico was struggling a lot. just having a really hard time, right? So Puerto Rico operates independently from, just a little backstory. Puerto Rico operates independently from the US. They create their own laws. They do all of that. But Congress can say, if they don't agree with something, they can kind of step in and say, no, we're going to change that. We're going to do this, that, and the other. To stimulate the economy, Puerto Rico created a law that basically gave no income tax and to businesses. And if they were exporting a good or a service from Puerto Rico and they were based in Puerto Rico, they'd pay 4% on that, as opposed to the 21% that exists in the United States. So that was kind of set in place then. But the cost to uproot and move everything over to Puerto Rico, there was a lot of rules about, like, you had to have an office here, you had to do this, you had to, everybody had to be Puerto Rican, a lot of different little facets to that. But over the years, that has changed. And when Biden came in and said, we're going to increase taxes, there was another caveat. And sorry, I'm going a little bit bouncing around here, but there was another rule. And one of the big reasons they didn't move originally over to Puerto Rico, the hedge funds or any business, is because they could take the money that they made as a management fee, right? So they get a cut of however much money they make, was essentially exempt, or at least taxed a lot lower than the 21% that another company that was selling SaaS would have to pay. So anybody managing people's money that got a cut of that money based off of the return that they got their customers, that was taxed at a lower rate. So it didn't make a whole lot of sense for them to uproot. Biden said, we're going to get rid of that, coupled with the tariff stuff in the Trump administration and the Chinese retribution and all that stuff. Now what's happened is a ton of hedge funds have gone, fuck this, we're going to Puerto Rico. And the way that they get around it is they go to Puerto Rico, they set that up as their headquarters. All they have to do is put two Puerto Rican residents in the company. That's it. Doesn't specify they have to be senior level, doesn't specify that they have to own the company, doesn't specify, none of that. They put two receptionists to take phone calls, whatever, in that tiny little building. They have to hold certain meetings, like a certain number of meetings there every single year, which is nothing to a hedge fund, right? Mm-hmm. And then they get zero income tax, and then any management fee that they make from managing all the tens of billions of dollars that they do, they only get taxed 4% as opposed to 21%. So the government is getting a lot less money.
The income tax, when I think of income tax, I think of obviously personal returns. Does that income apply to whatever like the fund would make? So if you have a fund with $100,000 and it generated 10 grand,
yeah,
is that income for the fund? Is that the tax rate, or is it like, okay, I paid myself a management fee 10 grand, that's my income?
Yeah, I believe it's the management fee.
Okay.
So like if there's a set,
well, no, you said so the management fee, okay, so so if I'm taking, so I guess there's three things here. There's management fee, there's capital gains, and then there's just straight income tax.
Yeah, so the capital gains will get passed off to the people's money that it is. So that doesn't get passed off to the hedge fund. So it's really just the percentage that they're making off that people's money that gets taxed at 4%, and then I believe the rest is tax free. And then really the only stipulations are like you have to donate like $1 million a year to a Puerto Rican charity or something like that, and that's it. And that's the only stipulation. And now they're saving billions a year,
which sounds high, $1 million, but in the hedge fund world that we're talking about, is that, what's that, $5 to you and me?
Probably, yeah. I mean, Steve Cohen the reason he bought the Mets is because he was one of only like 6 people in the United States that had that much cash to spend billions buying a baseball team.
That's incredible.
In cash.
How do you move that much money?
I have no idea. Bitcoin.
That's incredible.
Yeah, so they're to our point on taxes and everything, I think this hits home. I don't know what the middle ground is. I don't know what the right answer is. We haven't figured it out to date, right?
Yeah.
But regardless, the more rules and the more everything that gets set up, the more regulation, the more loopholes that creates. And hedge funds are, as well as companies and everybody else, are going to take advantage of it. And this is the latest example of them doing that. And it just happens to be hedge funds.
Yeah. I mean, and if we go back to the expert on all of this, Dave Ramsey, what does he say? He says, skip out on eating out, skip out on your Starbucks. You know what's a great way to save money is just skipping out on paying taxes.
Yeah. Hell yeah.
So Dave Ramsey loves this idea.
Yeah. But again, it's like the law even, I mean, if you had to spend like $1 million or whatever, or hire 2 people in Puerto Rico and get a building in Puerto Rico, it's another regulation, going back to regulation, it's another regulation that makes that hurdle even higher for everyone else. If I wanted to start a fund and I get it $2 million and I'm trying to grow my fund, I need all the money that I have in order to try and beat the market and do better, right? And make money for my clients. I don't have the money to go hire 2 people in Puerto Rico and get a building and donate to charities and things like that. So then I'm stuck with the bill of the US government. But these guys with tens of billions of dollars just do whatever they want and can figure out a way to skip out on all that.
Yeah, and they certainly close the gate behind them while they're doing that. And I think that kind of bringing it back home for us and what we're talking about here on the podcast is like, how do the people on this side of the gate go about building wealth, even getting a sliver of the pie on some of this stuff? When you talk about investing, the idea of some risk and some return, no one that I know gets into it saying this is zero risk. But the people we're talking about on the other side of the gate with all these loopholes and the power that comes with having $1 billion, they essentially are doing it risk-free because of all this.
Yeah, and they'll just continue to do it until somebody stops them. And I think the only way that happens is if us as Americans come together to figure out how to stop them. And a prime example is GameStop. We know that if a group of regular people come together to say enough is enough, it works. Melvin Capital, they thought they had zero risk while shorting GameStop, got crushed.
This has been a wild one.
Mm-hmm. Could have gone on forever.
Yeah. Good thing the music started, so we didn't.
That's right. Our fade out music, our acceptance speech music.
James Goodwillie, another Ctrl-Alt-Invest.